You know, sometimes a single day in the market tells you everything you need to know, and we're about to look at one of those days, an event that tells a much, much bigger story. This isn't just about commodities trading back and forth. No, this is about the future of energy, our infrastructure, and really what we decide is truly valuable.
So here's the puzzle we're digging into. Picture this, January 30th, 2026. The traditional safe havens for your money, they just fell apart. We're talking billions wiped out in a flash. Gold, silver, imploding. But while all that panic was going on, one and only one asset didn't just survive, it was actually soaring. So the question is, what on earth was going on? Why?
And I mean, just look at these numbers. It's pretty stark, right? Silver gets hammered, down a staggering 25% in a single day. Gold, the ultimate safe haven, is down 9%. And then you have uranium, completely ignoring the chaos, chugging along in the middle of a 24% surge for the month. This was not a blip. This wasn't just market noise. The market was screaming something fundamental, and frankly, most people weren't listening.
All right, so to really get what happened, we've got to start with what broke. We need to look at why these so-called safe havens failed. So let's dissect the case for gold and silver and see just how fragile it really was.
Okay, so think about what drives demand for gold and silver. It's a cocktail of feelings, right? You need a little bit of geopolitical fear, a dash of dollar weakness, a whole lot of speculation, maybe some hope for industrial growth. It's all based on sentiment. But then you look over at uranium. What drives its demand? One thing, electricity, period. We're talking about two completely different animals here.
You see, those big rallies in 2025, they were basically a house of cards. Gold's 60% jump, that was pure fear. Silver's absolutely insane 148% surge, that was a mix of wishful thinking about industry and, let's be honest, pure FOMO, fear of missing out. And the craziest part? What brought it all crashing down? It wasn't some huge global event. It was just a rumor, the suggestion of a new Fed chair who might be a little tougher on policy. That's it. That's how fragile the whole thing was.
It's like gold itself was speaking to the market that day, and what it said was this: I am only valuable when you are scared. The second you're not, I'm just a shiny rock. Its value is completely conditional. It's just a fear gauge, and when that fear disappears, poof, so does the reason for those high prices.
Okay, so that's the fragile side of the story. Now let's turn to the asset that didn't even flinch. We're pivoting now to the unbreakable case for uranium. And spoiler alert, this has nothing to do with fear. This is about infrastructure.
This brings us to a really important concept, what I call the necessity trade. This is an investment where value has zero to do with how investors feel in any given day. It's not about speculation. It's based on the non-negotiable physical needs of civilization. It's about what we absolutely have to function.
I want you to just let this number sink in for a second. 40 to 60 years. That's how long the fuel contract is when a utility company builds a new nuclear reactor. Think about that. When they commit to a $10 billion plant, they are legally locking in demand for uranium for most of a person's working life. This isn't a bet on next quarter's earnings. It's a binding, multi-decade commitment.
Yeah, this is the key. The demand for uranium is locked in by the laws of physics, not the whims of the market. These reactors, they have to run. They must be fueled. You can't turn them off. And there are zero substitutes. None.
And this is where it gets really interesting. This isn't a guess, it's just math. We see the demand right now, in 2025. We know where it's headed by 2040. It's going to more than double. But here's the really big problem. Supply can't keep up. It takes so incredibly long to get a new mine running that even if we greenlit a dozen of them today, we wouldn't see that uranium until after 2030. So this deficit, it's not a future problem. It's here now, and it's just going to get worse.
And just when you think the demand curve couldn't get any steeper, you throw the single biggest demand driver of our generation onto the fire, AI. All these new data centers, they are unbelievably power hungry, and they need that power 24/7, no exceptions. And it has to be carbon-free. Well, guess what? Wind doesn't always blow, the sun doesn't always shine. The only thing that provides that kind of constant, clean baseload power is nuclear. The AI boom has basically set a trap for our energy grid, and nuclear energy is the only escape hatch.
So, okay, the demand side of this equation is basically a freight train with no brakes. But what about supply? Let's flip over to the other side of the ledger and look at why the supply system is, for all intents and purposes, broken.
See, this isn't like oil, where if the price goes up, you can just go drill a few more wells and get more supply pretty quickly.
With uranium, it's the exact opposite. The supply is incredibly slow. I mean, painfully slow to react. You're looking at a 7-year lag, at a minimum, from the moment you find a deposit to the moment you get a single pound of usable fuel. You have to go through discovery, permitting, financing, construction. It's a massive, expensive, and complicated process. There's no magic button to push for more supply.
And now there's a whole new player in this market, governments. And they're not treating uranium like just another commodity anymore. Oh no, they're treating it as a matter of national security. When you see it added to the U.S. critical minerals list, when you see billions committed to new reactors, when you see bans on Russian imports, that's not the free market talking. That is government policy creating a rock-solid floor under the price. They've made a decision. Our nuclear reactors will not run out of fuel. End of story.
Okay, so let's bring it all back to where we started. That crazy divergence on January 30th, what was it really telling us? And more importantly, why does this matter so much right now? So the big banks are finally starting to wake up. You see Bank of America calling for $135 uranium. JP Morgan, they're still bullish on gold long term. But after everything we've just laid out, the locked-in demand, the AI supercycle, that 7-year supply lag, you really have to wonder, right? Are even these bullish forecasts for uranium high enough, or are they still missing the bigger picture?
That price spike in early 2026, that wasn't just another rally. That was the moment the dam broke. It was the moment the market finally realized that the utilities, the buyers, had lost all their leverage. For years, they were in denial. Now they're being forced to capitulate. They get it now. They have to pay whatever it takes to get fuel, because the alternative, shutting down a $10 billion reactor, is simply unthinkable. The fuel cost is just a rounding error compared to that.
And that brings us to the really big question, the one that hangs over this entire market. We've got a pretty good handle on what gold is worth when people are scared. We know what silver is worth when the economy is booming. But what is the true, potentially uncapped value of the one thing modern civilization literally can't do without?
And really, it all boils down to this. Gold needs a crisis to thrive. Silver needs economic growth. Uranium, it just needs the lights to stay on.